You are a yummy pizza filled with oregano, tomato, cucumber, labna, and of course, olives, friends. We're going to speak about PulseChain and the risk curve, and you can apply this to everything else. It's not just PulseChain. We have Bitcoin, we have Ethereum, you have Avalanche, you have Polygons, pretty much have everything. You really got to understand how money flows through, because people are going to basically tell you they are 100% convicted in something, and then they're going to get their ass handed to them on a plate, spanked, when the next phase of the crypto cycle plays out. Let's start with some real numbers. So it takes about $50 million of net buyer pressure to make PulseChain ecosystem go up a 4x. And how do you calculate that? Well, you pretty much just have to go to PulseX website, or you can maybe use GoPulse. And you just have to go up and add all the asks of basically the liquidity pairs with Pulse itself. And what I've done now, friends, is actually gone to PulseX website, the info page. It's annoying, it takes a while to load. And you see on the right-hand side here, we have liquidity, wrapped Pulse. Yeah, that's 85 million. Remember, liquidity is the bid plus the ask. So how much people want to buy, how much people want to sell. If you want to just find the ask, what's on the offer, you got to divide it by 2. So it's around, it's around $45 million here. Okay, so this is PLS. Now, I'm not sure if there's other cross-referencing or if this is the full amount. Remember, this is just here. There's also PulseX V2, which you could go down here. Now there's a couple of million here. And then there would be fragmented liquidity also on 9-inch, on 9mm decks, etc. So, I mean, the real number, it's around, 40, just to say 40 to 50 million-ish. That's why I've just rounded it up just to say 50 million. Now, because there's 50 million, we know to make the price go up a 4x, you need to insert net buyer pressure, $50 million. That's what you need to do. You need to add $50 million to that. And I'm not 100% sure on that total liquidity number, friends, because if you look at Pulse market cap, it's only 700 million, So 700 million is like normally, from just the average metrics, if you do like 1.5% of that or 2% of that number as liquidity, you get 14 million. So I'm thinking about like, how is it that everything is combined, that liquidity, that thickness, when average it should be 14 million. It could be because of the PulseX yield farms. That could be one explanation. There's also liquidity as in people leaving resting offers, maybe a 9mm decks, but not that much. It's not that much. So this might be something just to think about their cross-referencing and stuff. But even if there's $50 million on the offer, right? To make it go up a 4x, you need 50 million. Yeah, and whatever it is on there. Remember, it goes off a square component. So if you want to make the price go a 100x, you will need to 10x whatever's on the offer. So if there's 50 million, right? What's 50 times 10, friends? It's 500 million. So you need a 500 million net buyer pressure, net buyer, not inserted because you're finding all the sellers, right? You need net buyer pressure to be in there and then nobody else to exit along the way. And if you could get that, you get a pricing higher of 100x. But let's go through some examples of what's happened before. I see when Pulse went up 3x in January this year, heaps of PulseChain altcoins were birthed and went up. And I'm going to play for you some nice pump music while we check out that chart. You can see it right here. You see this part? This was altcoins starting to move in PulseChain, big time as well. You had pDAI, Teddy Bear, things started moving around here, around this vicinity, okay? But you want to see like how much did it take for everything to basically start happening? Remember, altcoins were moving already just here, okay? So there you go. It's just literally there's a 2.5x, not even. So the SPEAR did a 2.5x while we're in Bitcoin halvening gear, which is still PvP mode. And altcoins on PulseChain started getting made even more, and they started booming. Now, they did continue all the way up to this point, right? All the way up to this point, just so you can have a look at this. Yes, it went up here, but then it gets rejected, comes back down. But you still get the point. That's something just to keep a mental note of. You go, wow, when the SPEAR goes up, altcoins come and appear. And how much did they come and appear? Well, you know, they started going up a lot, man. Like, I mean, I'll give you examples here. You have, this is pDAI, friends. I know pDAI's copping a beating hard as well, but go check what it did in January. Okay, in January, look at the run it goes up on. pDAI does an 8x. It actually goes all the way up to a 13. So when basically Pulse did like a 3.5, pDAI did a 13.5. You see that? See, it's a 4x multiplier on the PLS ratio. You can actually come back and actually see this great feat. So let's see what it did in January. I mean, it's actually such a big move. Look at this, friends. It actually outperformed, did 11x on Pulse to the top. Bang! Huge 10x on 11x on Pulse. That's big. And it's not just pDAI from the Atropa ecosystem. You have here, you have HOA, which if you go to January, right? HOA, Hex Orange Address, does a 10x, right? 10x on USD. And you actually see it right here. Let's check January. How far does this go up when it starts moving up? Look at that. It goes up 10.3x against the SPY. So you see how when the SPY goes up, these things start moving. Now, a lot of people, you see this and you think, oh, wow, is there some sort of secret here with crypto? No. And it's not secret here with PulseChain either. This happens everywhere. You see, when Bitcoin went up 2x, heaps of Bitcoin JPEGs and DeFi also went up. And I can come and show you the chart just to help you understand this. This is what happened, right? So if you remember, friends, in last year, 2023, Ordinals, Bitcoin Ordinals came here. They came here, right? They're Bitcoin Ordinals. But you got to think about, what did it take for the move to happen? It basically flipped green. All Bitcoin had to do was go up 50%. Ordinals, I think, became even more active at 80%. So it hadn't even done a 2x yet. You see, that's crazy. And then if you go forward as well, look at this move. When did Bitcoin had like this run up here from like October. Here you have the Bitcoin DeFi JPEGs appearing. See, that's only done like a 2.5x. So the SPY, right, of crypto, Bitcoin does like another 2x and then everything flushes up. And it's not really just everything. There are a lot of like JPEGs and Ordinals and runes and everything else that they start to throw in out there. And there's no guarantee that the one you've selected is going to go up. But you get an idea of the psychological wealth effect, which is what central banks basically run the whole economy off. Psychological wealth effect is, you know, it's our number go up. So basically, if I want you to feel good, I'll just make your portfolio say like 5 times higher number, even though you don't cash out or anything. Just look at it, just so you think it's worth that much. And pretty much this happens with everything. Another thing this happens with, friends, happens with crypto itself. So the stock market continues to go up. What happens after that? Bitcoin recovers. You see? So the stock market's big daddy and Bitcoin recovers. Then Bitcoin goes up eventually, has these bursts. What happens after that? The altcoins in crypto recover up too. So everything is basically just following everything else. And that's the risk curve, right? You're moving along the risk curve. But risky stuff, the appetite for risk only appears once the super boring, safe blue chip things keep continuing. And people, when they're in a lot of these coins or assets, they never really think that they're in the super slow, boring thing. They always think that they are in the thing with the best value every time. They think, well, you know, this is the most consistent and et cetera, et cetera. And everyone's down the risk curve. And if you go further down the risk curve from someone, it doesn't matter where they are from. Like for stock market people, they see Bitcoin as a zero value Ponzi. And then in Bitcoin people, they see Ethereum as zero value Ponzi. And Ethereum people see PulseChain as zero value Ponzi. PulseChain people see the meme coins or the altcoins on PulseChain, they see them as all zero value Ponzi. You see that? You go further down the risk curve. And then everybody in the meme coins and altcoins on PulseChain, when something new appears in the next 3 months, the first thing we'll say is, okay, 99% chance you go to zero, you probably get abandoned. You know, that's pretty much it. Everyone's always fighting this wall of uncertainty. So this behavior, friends, has also happened with Soylana, right? When Soylana went up 4x, a ton of alt season mania happened and lots of coins like BONK and WIF moonshotted 50x. Yes, it did, big time. So we can actually go down and have a dive deeper into this. So Soylana, friends, starts moving up from here. But when did BONK actually do its big move? BONK did its big move around Dекember. It was the first thing to move. But look at this, Soylana, friends, did a 5x. That's a whopping move. Let's go have a look at what BONK did from that December period. Look what BONK did, man. This is absolutely insane. So this obviously is orchestrated plan, but in that same time period, look what BONK ends up going to do, a 150x. So Soylana does a 5, the BONK does 150. Big amount, right? You can also check out WIF. I'm not sure if they have the exact, the dog we've had, the price chart from the very beginning. Maybe they do. You can actually check it out here. See WIF. This is not the full chart of WIF, friends, okay? But even to show you, this did a 40x. Because WIF, I've covered for you, WIF was shielded by Ansem. People were alerted to it. I think he was streaming with some girl. It was 100K market cap, $100,000 market cap. It went to 4 billion. So that's a 40,000x. But, you know, there's lots of coins. There's lots of coins out here. But I'm just showing you that ignoring the risk curve, you get dusted, because you're seeing everybody cheer about Soylana and everything right now. I mean, look what they're cheering on, friends. You know what? I know where most people have entered. They've entered around here. They've entered around $100. Yeah. The believers were buying down here. That's the believers, yeah. And then people who just come and play this momentum, now they're like, oh, you're going up forever. But are they really going to be holding for long? You'll see. We'll see how it plays out. But look at this. Most people are in Soylana at $100. Maybe they're in, like, I've heard like really good prices, like $70. Some people are like, oh, I got in at $70. Yeah, bro, you're only like a 2x. You're literally up to 2x. Like, for Soylana to keep doing your amazing things, you got to go flip Ethereum now. You know, for example, in PulseChain, if we do a 5x, we are literally just flipping Tron, right? Tron. By the way, that's the whole ecosystem flipping Tron. PulseChain itself is only 700 million market cap. So PulseChain, let's say it flips Corridanzo. Just to flip Corridanzo, man, it's a 30x. Just to flip Corridanzo. Soylana, you're already bigger than them. You see what I mean? So obviously, as you get bigger, it's harder and harder to keep growing. And of course, this principle, everything I'm showing you, happened with Ethereum as well. Like literally everything. When Ethereum went up 2x, heaps of altcoins went up 10x. You saw it. Ticker Bitcoin, MOG, everything, right? You had Pepe as well. Pepe went up enormous as Ethereum goes up. So it happens everywhere, right? You have the SPI and the core goes up, and then everything flushes up more. The higher the SPI goes up, the more that the altcoins go up. And I've explained here as well, core coins, they are lower risk and they will give you much lower returns due to having a higher market cap. I know some people say, oh, market cap doesn't matter. Okay, bro, so here we go. We have 1,000 examples of this working. Happens in Bitcoin, happens in stocks, happens in gold. A market cap, friends. The whole thing about market cap doesn't matter. It's a Richard Hart talking point. That is, like I said, that is you were able to basically hide the real circulating market cap number for a certain period of time before people figured it out on chain. It doesn't mean it doesn't work. It just means, yeah, technically everybody could keep hiding it. But once basically people have figured out how to identify the circulating market cap, you can't keep hiding it anymore because we know how to adjust for it every time. You see? So it's more of like a metaphor in terms of like, don't judge a book by its cover. That's what the lesson is for this whole market cap discussion from Richard Hart and Hex. It's not never use market cap because it's stupid. No, that's not the lesson. The lesson is don't judge a book by its cover. Just because something has a low market cap doesn't mean it's safe, because it could be low market cap, but you know, an insider owns 99% of the coins and they can just keep dumping on you every time you pay into it. That's one extreme. Let's look at the other extreme. Just because something says a high market cap is big doesn't mean it's expensive, pretty much, because all the coins, once again, could be owned by somebody who's never going to dump. So you can have a low market cap where there's somebody who is a nefarious actor who will keep dumping. And then on the other extreme, you have a very high market cap, which is Hex, where you have a benevolent actor who is going to keep holding. You see? So you just got to figure that out. But that's obviously not the lesson that everybody... But I'm telling you, that's the lesson you should be learning. It shouldn't be like, oh, well, throw everything out because of market cap. No, because we have thousands of examples here. Like, as you go up the line, randomly picking market caps, you just get to see, on average, you're picking heavier stuff if they're higher market cap. Heavier means obviously lower return on average. And you get that, man, because there's more people in the network on average. Remember, all of these are on average. They are not gospels. And really, when you think about it, it makes sense, because if you take on less risk, you get less reward. Okay, so you're not gonna make a 2x if you're investing in government bonds earning 5% yield. Yes, they're handing out cash. They're never going to print money and just hand you out a 2x. They're not going to do that. It's agreed upon by the coupon, whatever the treasury bond rate bond is. That's what you get. Yeah, if you want more risk, okay, if you want more risk and more reward, you have to move out of US bonds. You got to move into stonks. Okay, and then you want more risk on that, you move into Bitcoin. You want more risk again, you move into obviously Ethereum and then altcoins and so on. All right, and all crypto is correlated. That's another thing to always remember. Everything is correlated. The directions are pretty much correlated. They're pretty much, okay. Now, if you study them minute by minute, no. But over a cycle, over a period, they're all correlated. And it all comes down to how much risk can you stomach? That's what it comes down to. If you can't stomach risk, well, you're going to get lower reward. But at least, you know, like, oh, well, if you're happy with some place of risk, then you know, okay, stocks go up, they keep printing money. All right, Bitcoin goes up, and I'll get like some sort of premium on top of that. When you're in like a top 100 altcoin, for example, or top 30 altcoin by coin ranking. That's one way to think about it. But then if you want more than what they're offering, you have to do more work. Now, what I'm saying is it's obvious, but why don't people talk about it? Okay, well, I made videos on this last year. I made so many videos on this last year. And that is when people are in each cycle, all right, when they are in each cycle, like, you know, 2017 and then 2021 here, when they're in each cycle, what they're doing is they're going backwards to the previous cycle mentally, and they're looking at the returns that those people got from the bear market. And what they do is they anchor to that return. And they say, well, you know, Bitcoin, you got a 4,000x in that first cycle. So I deserve a 1,000x in that next part. You didn't get a 1,000x. You got like a 400x. So it was underwhelming again. And then in the next cycle after that, people were looking at the 400x part of Bitcoin in 2017. And they're like, well, you did a 400x last cycle. I deserve at least like a 200x or a 150x, and then bang, it only comes out like, you know, whatever it is, a 30x or a 50x. You see, that's what ends up happening. That's what ends up happening each cycle, each coin, because people are always anchoring from the past. They just have to accept lower growth rates. But it's tough in this game because so many altcoins drop off, and that's what adds to the stress of everybody. So they all correlated, right? We are all correlated, and it's because of the money printer. Like I said, the US economy leading everything, but also the debt fiat Ponzi system is on its last legs. We're on life support. So they put the money printer on, we all go up. They turn the money printer off, we all die. It's like that, in and out, breathing in and out with the patient. It's just the oxygen mask, pretty much just breathing for the patient, the ventilator. Eventually, they're going to kill the system and move everybody onto another system. But until that point happens, right now, we're all correlated, in and out. Also, even if you don't believe that theory, because of globalization, everything's like linked so fast with social media. Travel's getting faster and faster. If you think about it like that, it makes sense that everything is linked because of all the trade deal agreements and everything everywhere, right? So no matter which way you spin it, whether you like, you know, you want to go deep state, you really want to know the truth, or whether you just like want to read some like, you know, Keynesian economist explanation for that. So my explanation is the real one because it comes from the central banks. The mainstream media will tell you everything's more globalized and stuff because that makes you look away from the money printer. You don't think about the money printer as like as part of the civilian population because you think, oh, no, the government, everything's under control. But no, they're robbing you. They're robbing you blind. Now, after hearing all these, friends, this is the truth. There has never been a scenario where a core coin goes up infinitely and the altcoins don't move up. Never. There's every single cycle. Bitcoin has gone up and then risk on has appeared. That's it. Risk on appetite, which is altcoins go up from there. You know, Ethereum has gone up and then the Ethereum altcoins go up. Soylana has gone up. These Soylana altcoins, everything in the ecosystem. Basically, the layer one chain goes up, and then people build more stuff on the chain, and then they get basically mushroom popping experiences, and you get way higher returns. There has never been a case where a layer one coin has done like like a 50x, and then the altcoins on that chain do like 10 and 5. Never. It doesn't happen, and mathematically it can't even happen because you think about, okay, well, if all this money has come in, when people go and spend it, they're buying into lower liquidity things, which by definition go up. The only way for this to happen is if the only available coins were super expensive grifts. But that doesn't happen. People keep launching these coins from zero. They're making meme coins, making altcoins, making DeFi, and it is what it is. So knowing this, you've seen this like time and time again. People who learn this, friends, you understand it. People who don't, if you don't understand this, you are like, and you're basically talking bullshit. You are gambling. It's like you have arrogance. You're sniffing glue. And everything around that type of attitude is just somebody who hasn't done their homework. It's somebody fully guessing. They can't put one part of the chart to basically line up with what they're saying. It's basically like, no, this is a good thing and it has to go up because of X, Y, and Z. But you dig further. You're like, wait a minute. You only have your opinion because you're not doing your homework. You aren't in the trenches, okay? My friend Tommy's in the trenches, okay, with very, very sharp elbows and on a squeaky chair and fluffy slippers. You're not in the trenches at all. You're covering this stuff or you're doing homework, maybe like 30 minutes a day, 1 hour a day max, okay, browsing around just covering bullshit news. You're not going to find your way into the high reward stuff. So what people end up doing is, friends, by the way, they do this in Bitcoin, Ethereum, altcoins, PulseChain, everywhere. See it everywhere. What they end up doing is, instead of admitting to themselves, oh, I have to do harder work, I have to go further in to really tap in to what the average consumer wants. Why are people joining crypto? Why are these network effects flowing? Instead of doing that hard work, which I've done here for you, highest value content in crypto, thank you for liking and subscribing. Instead of doing that, instead what they do is they say, I have the answer. I'm stupid. Everybody else is, I'm smart and everyone else is stupid. And my bags are going to go up 100x and you're all stupid once again. That's their conclusion. The conclusion, just keep calling everyone else silly, say everyone else doesn't know what they're doing, and their bags are going to go up, okay? Just because they feel like it, because they're like, oh, well, because I deserve it. Markets don't work off this what you deserve or anything, man. It is what it is, okay? Just like go talk to everybody else building these like DeFi applications and go tell them, hey, thanks for building your stuff, but all the growth is going to like literally vaporware meme coins because, your tech is cool, but you're not solving for the fact that you can't convince people to hold your token. Your tokenomics is not convincing people to hold their token. There are no memes. There's too much competition, okay? And basically, you're just trying to create a vacuum for people to put their money in so you can dump anyway, but you're just trying to not tell people that. You're just pretending to be like a very nice, diplomatic person and trying to avoid the question. Like, we know you're here to dump just like everybody else. It's just that you're posturing that you're pretending not to. And like you've done your research, friends, you go back in time, as per my previous videos, 4 years ago, if you buy any coin in the top 100, your odds of getting an enormous return were very low. I mean, I went back and I showed you the CoinmarketCap Historical Snapshot. You do this every time, right? Go back 4 years ago, Bitcoin halving year, go to the top 100, which is the biggest market caps, closest to the source of Bitcoin and Ethereum's liquidity 4 years ago, and go pick a random coin and see how it did. All right? And I ended up checking it. Basically, in the top 100, there's only 15% chance you'll pick a super performer. 15% chance. Out of the top 100, 15% chance. That means everything else was a landmine. Isn't that crazy? So here's the thing. If you know there's only 15 to 20% chance, pretty much, let's say 1 in 5, of picking something that's a super performer, which is over the index. Otherwise, you just buy Bitcoin and Ethereum, right? So there's only 1 in 5 chance of picking it. Like, how much reward do you want? You want big reward, man. There's only 1 in 5 chance. You want to know what's interesting? If you go down the line, so top 100, go to top 200, top 300, top 400, the percentage is still the same. Interesting. The percentage is still the same. So there's still only about a 1 in 5 chance you pick like a moonshotter. But the reward scheme is different. That's the kicker. In the top 100, okay, your moonshot, your 1 out of 5, on that winner, your average and how much it overperforms Ethereum, it's a certain number. But then if you go to the top 200 and top 300, which is smaller market caps, you still have the same odds. But when you win, you're beating those top 200 guys. So I'll just give you a clear example, friends. You can use the others ETH and everything. And we've seen basically like if Ethereum from here to $14,000 does around a 4x. If Ethereum does like, maybe a friendship, maybe goes up here. If ETH does 4x, okay, then top 100 does 8x. That's an average, okay? You might find, right, winners in top 100, let's say it's an average of, let's say it's actually 10x. Let's say it's 12x. Well, you might find winners in top 200 to 400 equals basically like 18x. right? So what I've shown you is, in a nutshell, doing your research and hard work exponentially blows everyone else out of the water. And you do get compensated for it. You do. Because you're basically increasing difficulty, but your reward scheme is enormous. Now, even though we know this, why don't people do this a lot? Like I said, it's because they don't believe that. You see how Ethereum is only going to do a 4x? People don't believe that. All right, they don't believe that. Or what they think is, they think Ethereum will still diminish, but their altcoins won't. To go speak to everybody in crypto, they're all the same. They think, no. Okay, Ethereum, you're going to diminish. You're going to do like a 2, 3, or 4x, but my altcoin will do 100. My altcoin will do 50. Nope. No, it won't. On average, no, they won't. No chance in hell they won't. I'm talking about the average, everyone top 100. All the altcoins, right, from all the data information, all the charts we've been checking out, the altcoins are a function of whatever Ethereum does, which is a function of Bitcoin, which is also slowing down, okay? So if you wanted your 100x, you needed Ethereum from today to basically do a 20. You need to do a 20 and you're a winner. So Ethereum does 20, you'll do 100. You're doing a 5 multiplier on Ethereum, which is enormous, by the way. Enormous. That's an enormous winner. Ethereum's not doing 20 from today. No, it's not. Ethereum, friends, Ethereum does 20x from today. It's literally nearly impossible. You're looking at like a $6 trillion market cap for Ethereum. Not happening today. Hopefully later on, but not in this cycle. No chance. So if Ethereum, right, if it's nice to us, it does a 4x from today. That's $14,000. That's still huge. 1.5 trillion for ETH. Yeah, if Ethereum does a 4, the average in the altcoins will be an 8. So if Ethereum does a 4, the average altcoin does 8. Look at this. A winner is going to be 12. That's a winner, like an actual winner. That 1 out of 5 winner that you're selecting. So you can go back in every cycle, you see this over time, and you're thinking like, wait, if the data's there and everything's obvious, why don't people wake up to it? Well, you see, everyone thinks they got the winner. Every single person in crypto is dead set convinced they have the winner. And they will believe whatever narrative it is just to kind of get you going. It is. And there is no perfect narrative. It is what it is. Litecoin people still think Litecoin's going to get an ETF and it's going to pump 100x and that decentralization maxis are the way to go. Litecoin people still believe that. XRP people believe that, okay, it's going to $29 because of Ripple and all these other, whatever it is, whatever their narrative is. Everyone's got a narrative. Everyone, right? Tron, you got Justin Sun, Chainlink, the CCIP stuff, Uni, the fee switch. Maybe the fee switch doesn't even do as much as we think anymore because it's just too fragmented now. You see these over and over and over again. Doesn't matter where you go, everyone's latched onto a narrative. Like, oh, that's what they're carrying. That's what they're using to carry themselves forward. So you get to see the 3D view of the game right now. And ultimately, there is no right or wrong. It's just that you understand we are all basically the same. We're all correlated. And if you find yourself up from today, if Ethereum has done a 4 and your coin's done a 12 and you're seeing a lot of these top signals, you haven't failed. You've actually won. You're actually in the top winning coin, if that actually happens. So, like, I mean, I'm hoping we don't get it to, hoping in some of our stuff we get like 16, 20, 24, 28, 30. But even if you're looking at something like PulseChain, if PulseChain's doing a 20 from today, the altcoins are going to do 50 to 100 to 150 to 250. They are every single time. The winning ones. The bad ones just fizzle out. So there you go. 3D scope of everything, friends. Remember, the only way to make it is truly to believe, even though these things are diminishing over time. You still got to do your research because, yeah, man, people aren't throwing in 1 week of salary into crypto anymore. Now, people are throwing in a year. They're getting used to a year's worth of living expenses in. You know, you're winning 10 on that. That's a big, handsome sum. Make sure you like, subscribe, buddy, but not catch you soon.